Have you ever felt like someone always knows what Bitcoin will do before you do? Sudden moves, no news, no warnings. Yet the whales were already active. In this episode of Crypto Decode, we dive deep into one of the most overlooked early signals in crypto trading: whale wallet activation. Specifically, how movements from cold storage, often invisible to the average trader, can preface major market shifts. And yes, all of this is on-chain. You just have to know where to look. Segment 1. What is whale wallet activation? In crypto, whales are entities holding large amounts of a digital asset. Their wallets often sit idle for months or even years. But when these dormant wallets suddenly wake up and move funds, it's rarely random. This event is called whale activation. It usually means strategic reallocation, preparation for OTC, over-the-counter sales, exchange deposits for distribution, or simply signaling a shift in market positioning. These moves aren't announced on Twitter. They happen silently, and those watching closely get the edge. Overlay suggestion: Arkham or spot on-chain dashboard showing high-value wallet active after 200-plus days of inactivity. Segment 2. Why cold wallet activity matters. Let's zoom in on cold wallets. These are crypto wallets kept offline for maximum security, typically used by long-term holders, institutions, and early adopters. They don't move for no reason. When funds leave a cold wallet, the intention is often serious. Moving assets to exchanges, possible sell-side pressure. Routing funds through mixers or bridges, attempt to obfuscate before major moves. Activating linked wallets, coordinated asset shift. This kind of activity is one of the most trustworthy early indicators of market intent from large players. Segment 3. Real Case Study. June 2024. Let's look at a real-world case. On June 2, 2024, Arkham Intelligence flagged a wallet dormant for over 3 years, suddenly sending out $160 million in BTC. The flow was subtle. Funds moved in batches, routed through intermediary wallets, eventually deposited to a Binance-associated hot wallet. 2 days later, Bitcoin dropped negative 8.5%. Did the whale sell directly? Maybe. Maybe it was OTC. But the signal was there before the chart moved. Tools to monitor whale wallets. If you want to stay ahead of the market, set up alert systems. These tools make it possible. Arkham Intelligence, real-time wallet activity labeling, with alerts based on wallet tags. Spot on-chain, visualize wallet relationships, flows, and historical activity. Nansen.ai, track institutional behavior, wallet clusters, smart money dashboards, whale alert, Twitter EX, basic but sometimes immediate updates. Pro tip, tag and monitor. Dormant wallets with over $10 million in Bitcoin or Ethereum. Known early adopter or ICO wallets. Cold wallets linked to Binance, Coinbase, or institutional custodians. Segment 5. How to interpret the signal strategically. Just because a whale moves doesn't mean immediate price action. Context matters. Here's how to think like a trader. 1. Destination matters. Moving to exchange, potential selling pressure, OTC address, long-term rotation, private address, possibly a reshuffle too. Compare with netflows. Is exchange inflow spiking right after activation? 3. Overlay with open interest plus funding rate. Is leverage piling up while whales are exiting? This is where on-chain meets market structure. Final takeaway: whales don't guess, they act. And cold wallet activity is their first move. You don't need private alpha. You need public data, interpreted correctly. So next time Bitcoin moves suddenly, ask yourself, did someone already wake up their wallet? Because on-chain whispers louder than price. Subscribe for more signal-focused breakdowns in Crypto Decode.
If you see any comments promoting random coins or promising huge returns, ignore them. We never endorse projects in the comments. Stay smart, stay safe, and always do your own research.